My name is Yoshida. I would like to explain the consolidated financial results for the third quarter of the fiscal year ending March 2024. Consolidated net sales for the third quarter of the fiscal year ending March 2024 was up 2.6% year-on-year and up 0.4% quarter-on-quarter to total 381,207 million yen. Operating income was down 5.8% year-on-year and up 13.7% quarter-on-quarter to total 24,027 million yen. Profit for the period attributable to the owners of parent up 20.2% year-on-year and down 7.7% quarter-on-quarter to total 14,754 million yen. Net sales hit a quarterly record high. We estimate that FX translations have a quarter-on-quarter impact of plus 12.3 billion yen and year-on-year impact of 13.1 billion yen in net sales and quarter-on-quarter impact of plus 2.6 billion yen and year-on-year impact of 0.4 billion yen in operating income. We made slight retrospective changes to last fiscal years and Q1 and Q2 of this fiscal year financial statements are due to the PPA for Honda Tsushin Kogyo and Minebea Connect. Please note that the figures on the following pages are revised figures. Next slide, please. This is for quarterly trend in net sales, operating income, and operating margin. The operating margin for the third quarter was 6.3%, which is down 0.6 percentage point year-on-year and up 0.7 percentage points quarter-on-quarter. Next slide, please. Here shows the difference between the forecast as of November and actual results for net sales and operating income by business segment for the third quarter. Net sales of PT exceeded the expectations due to solid growth in automobile and aircraft applications, although sales to data centers remained sluggish. MLS sales exceeded expectations mainly in motors for automotive applications and the electronic devices. SE sales was below expectations mainly in optical devices. AS sales exceeded expectations due to a recovery in automotive production. Operating income for PT was lower than expected due to a deteriorating utilization. MLS was broadly in line with expectations mainly due to strong sales of motors for automotive applications and electronic devices. SE was lower than expected mainly in optical devices. AS exceeded expectations due to factors such as price corrections and productivity improvement. Next slide, please. Let's look at the quarterly result by segment, starting with the Precision Technologies business segment. On the left is a graph indicating quarterly net sales trends, and on the right is a graph with a bar chart, quarterly operating income trends, along with a line chart for operating margins. Third quarter net sales increased 4.9% quarter-on-quarter to total 53.9 billion yen. Sales of ball bearings increased 2.9% quarter-on-quarter to total 38.2 billion yen. The monthly external shipment volume was up 9.2% quarter-on-quarter for a monthly average of 219 million units. This was mainly due to an increase in automotive applications thanks to the market recovery and content growth, as well as slight signs of bottoming out in data center applications. Sales of rod end and fasteners totaling 11.5 billion yen were up 13.3% over the previous quarter. Sales of pivot assemblies were up 1.9% quarter-on-quarter to total 4.3 billion yen. Operating income for the quarter totaled 19.8 billion yen, and the operating margin was 18.2%. On a quarter-on-quarter comparison, operating income increased 8.3%, while the operating margin improved 0.6 percentage point. Turning to product by product results, operating income for rod and fasteners and pivot assemblies increased quarter-on-quarter. Next slide, please.
Now let's take a look at the motor, lighting, and sensing segment. Net sales decreased 0.8% quarter-on-quarter to total 91.9 billion yen. Looking at the results by product, the sales of motors increased 0.6% quarter-on-quarter to reach 69.5 billion yen. This is mainly due to solid sales, particularly for motors for automotive applications. Sales of electronic devices were down 3.2% from the previous quarter to total 12.7 billion yen. Sales of sensing device totaling 8.9 billion yen were down 6.6% from the previous quarter. Operating income came to 2.8 billion yen, and the operating margin was 3.1%. On a quarter-on-quarter basis, operating income decreased by 22.2%, and the operating margin was down by 0.8 percentage points. Next slide, please. Let's look at the performance for the semiconductor and electronics segment. Net sales decreased by 6.8% quarter-on-quarter to total 146.5 billion yen. This was mainly due to higher sales from optical devices amid ramp-up production of new products, while sales of mechanical components decreased. Operating income totaled 12.8 billion yen with the operating margin of 8.7%. Operating income increased 1.2%, and the operating margin increased 0.7 percentage points quarter-on-quarter. This increase was mainly due to the jump in sales for optical devices. Finally, let's look at the next slide. Let's look at the Access Solutions segment. Net sales increased 13.3% quarter-on-quarter to total 87.9 billion yen. This was mainly due to a recovery in production of automotive manufacturers. Our operating profit totaled 5.7 billion yen, and the operating margin was 6.5%. Operating income increased 4.9 times, and the operating margin increased 5 percentage points quarter-on-quarter, mainly thanks to productivity improvement. Next slide, please. The bar graph here shows trends in profit attributable to owners of the parent, while the line graph chart changes in the profit for the period per share. The profit for the period was 14.8 billion yen. Earnings per share was 36.5 yen. Next slide, please. Next, this is the quarterly inventory trend. At the end of the third quarter, inventory totaled 300.5 billion yen, which is 2.3 billion yen less than it was 3 months ago. Next slide, please. This graph contains a bar chart showing trends in net interest-bearing debt, which is a total interest-bearing debt minus cash and cash equivalents, and a line chart indicating free cash flows. At the end of the third quarter, net interest-bearing debt totaling 237.6 billion yen was up 35.9 billion yen from the end of the previous fiscal year. Regarding the net interest-bearing debt forecast at the end of the year ending March 2024, we expect our cash position to improve due to our high cash-generating capacity. Next slide, please. The forecast for the full year ending in March 2024 has been revised downward, 77 billion yen to 70 billion yen in operating income after a close examination of market assumptions and the status of the order. Overall net sales is unchanged with slight revisions between the business segments. Operating income for AS is kept to the same level as initial plan, and the downward revision has been made for the other business segments. The exchange rate is assumed to be 145 yen to the US dollar. Next slide, please. This slide shows the forecast by business segment. Next slide, please. This chart shows the difference between the revised forecast and the forecast as of November. This is all for my presentation.